Is there major danger brewing in the way the majority of individual investors are putting their money to work in the market? Here now to debate that pressing issue of active versus passive investing, Herb Greenberg, Pacific Square Research, our own Bob Pisani. Bob, you first. What do you make of what Icahn said? You know the ETF world as well, if not better than everybody.
I love Carl Icahn, but I think he's got to worry about some other things. Look, Carl is an active investor. We know active investors have always been a little bit hostile towards passive investment vehicles like ETFs, and that's what an ETF is. It's a passive investment vehicle. But they don't know what they're buying. Seriously, the great thing about ETFs is they're perfectly transparent. You can see every minute exactly what you own. And by the way, if you own an S&P 500 fund, I think I know what I own. I own the S&P 500.
Right.
I don't see the problem. I see an investment ideology conflict. That's what I see.
He's not talking necessarily about the tried and true ETFs that most investors are putting their money into, the SPY, et cetera. He's talking about some of the more illiquid ones that could have some genuine concerns that a good portion of investors don't know about.
Why don't they have that? Why doesn't he have that concern about mutual funds? There are plenty of obscure little corners of mutual funds. If you're talking about high-yield bonds, for example, he did mention that one. Okay, so high-yield bonds, 3% of probably high-yield bonds are in the ETF space. It's very, very small. Most of it's in the mutual fund space, and that's where the big problems are going to occur, not in ETFs. I just don't think he quite gets how the structure works for ETFs versus bonds, mutual funds.
Well, them's fighting words, Bob.
Oh, hey, did you see Larry? You were with Larry Fink, were you not?
Did I see it? I was sitting between the two.
Exactly. And Fink was practically apoplectic about it. He said that Icahn was dead wrong in his characterizations of ETFs and basically implied Carl didn't quite understand what the structure was and what was going on
Well,
there.
because Larry was also defending the BlackRock business. Right?
Absolutely. Listen, Larry made one of the great investments of all time. BlackRock bought iShares at a moment where they still weren't a big business. I think he paid $11 billion. People said he was crazy. It's turned into a fantastic, one of the greatest investments of all time. But he still made the main point that he doesn't quite, saying Icahn doesn't quite understand how the industry works.
Herb, I mean, the bigger issue is as you've had all of this money going into the so-called passive investing, whether there's a bubble that is going to reverse itself the moment that real volatility returns to the market, whether it's in the form of a bear market, the beginnings of such, a big correction, and then you're going to have active investing come back to the forefront. The cream is going to rise to the top. It's a cyclical thing, as some have suggested on this network.
Well, I think if you're a professional and you're looking and you have a hedge fund, say the type of people my clients are, they are positioning themselves, I'm sure, some are, on the short side with stock selection. You have to have stock selection. Yet there are still others who are so afraid that they've got to be, they use the ETFs as a hedge. But look, I think you can look at this both ways. And I think Bob makes good points. I was one of the guys who was out there on CNBC 5 years ago against Bob, raising questions about ETFs versus computers. And I think ETFs have proved themselves in some very tough market environments to not break the way some people may have thought they would break. Now, that doesn't mean that they don't have some sort of they've created some sort of broader issue that's causing all this tremendous volatility we see. I still don't see people talking about that, but I still think the ETFs, I know Doug Cass wrote about this today, talking about Icahns in the right church, wrong pew, because you're really talking about, as you mentioned, Scott, the illiquid ETFs. But there's still great stocks out there. Remember, it's still a market of stocks. And really smart people still on the long and the short side can find great ideas.
To that point, Herb, I mean, maybe it's not just the good times that keep people in ETFs, but also if correlations are very high, Bob, then I would think that it's much more efficient to be in ETFs. When correlations start coming down and it's a so-called stock picker's
market.
But
everybody's doing the same thing.
Yes.
So you're saying the correlations are at the lowest level since '07 right now, Herb, as of the latest week.
Right. And that's where you can get some potential for stock picking to come to the fore. Nobody in the ETF business is against active management. There is active managed ETFs. PIMCO's got a bond fund that's huge that's actively managed. Everybody is whatever you want. Let all the ideas come forth. But making sort of vague accusations accusations against the industry and against bond funds that they may be illiquid and they can, when we've already had these crises already. We've had Brexit, we've had the oil crisis, we had bond redemptions, massive bond redemptions this month. What happened in the ETF space? Nothing. They all function fine. And when you get these vague accusations from active management, I think people, the ETF industry sort of has to respond to that. That's my point.
Part of this conversation, sort of the genesis of, was because hedge funds had underperformed. And if the market was going up and hedge funds were underperforming, why bother?
Right. And mutual funds, for that matter.
Right.
Yeah.
Right. Why bother? Why not just set it and forget it and buy the market? And if you bought the market on election day, you know, in the wee hours or in the next morning, you've done pretty darn well for yourself.
But guys, there are moments, right, when. So remember that the morning that the Dow literally did open lower by 1,000 points? Do you remember that day?
Yeah.
There were severe dislocations in some of those funds because the fund traded, but the stuff in them wasn't yet, right?
Yeah,
a lot of people made a ton of money because they bought low. Other people lost a ton of money because for whatever reason they sold in that 5-minute window. That was a mistake. I mean, that's an issue, isn't it, Bob?
It's a market structure problem, not an ETF problem. What happened there was there were delays right here in the opening for the stocks, and that created issues. There's been changes in the way that happens now. There's much more automated opens that are allowed by the NYSE, and you saw in Brexit, we didn't have that problem, and the reason we didn't is that all the stocks down here opened at the same time with the rest of the market, and they were able to price the ETFs immediately. So my point is, it was a market structure problem, not an ETF problem that caused that August 24th.
Let me tell you guys, let me just tell you guys one thing. Look, I'm in the business of doing research on individual companies, and I can tell you that when I look at our subscribers, they're doing work on individual companies. On our case, mostly on the short side. But there are certainly people out there with funds, because let me tell you something. When the market broke many months ago, and a lot of funds had been positioned with ETFs as the short side of their book, they were penalized by their investors saying, what am I paying you 2 and 20 for when you're not actually doing work on the short side of the book and you're just using ETFs? So there are people who are doing serious work, serious stock selection, and while I am talking my book, the business I'm in, I know it. I'm doing it. They're doing it. They're looking for great names, and they're looking for it on the long side and the short side. And they can afford to do it. They understand the risk. I do think a lot of individuals couldn't do the research on the individual stocks, but they also couldn't do the research on the ETFs. That's the problem when you get to this whole indexing issue. You only buy the market and you're mediocre and the market goes up, you go up with it. But did you sell, and do you understand the risk when it comes down?
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.